What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is July 7th of 2020. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, we're not only going to be spending some time to talk about the craze in crypto markets over the last couple of hours, which have been oracles, as ChainLink has broken above $5, but we're also going to be talking about some of the plays that I'm either currently holding or watching within the oracle space for cryptocurrencies outside of ChainLink. And last but not least, we've got to talk about the craze in traditional markets as Tesla, Apple, and Amazon, and so many other tech companies continue to go up exponentially as we enter into what might be our dot-com bubble of the 21st century. So we've got a lot of things to discuss right after our quick sponsor. Our sponsor for today's episode is TaxBit. The IRS recently released new forms in 2019 that require all taxpayers to attest to whether or not they traded cryptocurrencies, no matter if they made gains or losses. TaxBit automates your cryptocurrency taxes, enabling you to effortlessly track, calculate, and report your transactions. Easily connect your exchanges to securely sync your transactions and run them through TaxBit's tax engine. Generate your completed tax forms with a single click. Founded by tax attorneys and CPAs, TaxBit is the most trusted cryptocurrency tax solution. Get 10% off your tax plan today with a free trial using promo code DataDash. Alrighty, everyone, so to dive into the video, let's go ahead and start by taking a look across the board for cryptocurrency markets. As we can see, the vast majority of cryptocurrencies are in the green right now, with very few exceptions down in the red. But as we can see from the top here, Dogecoin is clearly leading the market, up nearly 18% at the moment, close to around 20%. So if you guys still don't believe me when I say that we're going into an altcoin cycle, I can assure you all that this is probably one of the best signs that proves that. Now, again, it does prove one thing. It proves that a lot of it is rampant speculation. It's people coming in and trading off the trend. No doubt about that. And I don't disagree at all that a lot of this has to do with speculation. But as a trader and as an investor as well, who looks at 6 to 12 month time frames for some of my positions, I always like to try to focus in on when those shifts are coming. And we've been calling it since back in September. It's been one of the few things we've been very vigilant on here on the DataDash channel. And we can see here that there's a lot of other fundamental plays that are doing well. ChainLink, as we just mentioned, broke above $5 and has continued to rally upwards towards $5.55 at the current moment of talking. Aave has completely gone against my expectations. I was hoping it would do a 50% pullback. I was completely wrong. It did something around, I think, around 25 to 30% pullback. Is now up again 14%, breaking to new all-time highs, or at least relative highs for a very long period of time. And we've also got a lot of different plays like Bitcoin SV, which again is mostly on wash trading exchanges, and then a few other plays like Theta, Cardano, Ren, iExec, RLC. So a lot of other good cryptos here, and also NANO as well picking up a bit too. So I like seeing this. I like seeing a broad range of different crypto plays. But again, you see the trend here that oracles are picking up well. DeFi plays are kicking in still. These are the two trends here. Enterprise blockchain, which oracles fit into. And outside of that as well, DeFi as well. But oracles actually kind of fit a little more in the middle, somewhere in the middle actually, because DeFi applications do need to usually pull in price information. DeFi applications are usually dApps or smart contracts, and they basically operate in an autonomous nature. And they need to be able to get an understanding of what's happening in the real world. So it's not just enterprise that benefits from oracles, but also a lot of DeFi plays. So ChainLink is one of those, for example, that's obviously been leading the market. We've been talking about it here. This is what we've had written in our newsletter for a very long period of time. I've been bullish on ChainLink. I started building positions back here in 2019. Again, it's been a very long time and stuff, but it's been slowly but surely climbing up here. Again, if you would have bought generally at the range we've been talking about ChainLink since back here. I mean, we've been talking about ChainLink for a very long period of time. I think I first talked about it in like early 2018. But again, in the sense of actually building positions, it was generally around this range. So no matter where you got it around that range, easily have doubled your Bitcoin position in that case, which is really exciting. And it's good to see that it's broken out of this very long-term line of support and line of resistance that have been building up since back in March. So the trend is still continuing against Bitcoin. If you want to take a look at it in dollar terms, we'll go ahead and pull up the Link USDT chart here on Binance. We can see this has finally gotten past a line of resistance here around $4.20 that have been held for a very long period of time. And now it looks like we're starting to climb up even higher. Again, taking off the log chart, it becomes a little more clear that this is probably going to be in one of those seismic cycles that goes towards $8 or $10, some kind of big even number that's probably double of where the resistance range was around here last time, around $5. This reminds me a lot of NEO and a few other plays like Ethereum in their early days. And again, the market cap for ChainLink here, again, just keeping in mind around $2 billion. Sounds like a lot. It's not too much. This is something that, again, you could easily see if market buyers come in mass, they could probably push this up to a $4 or $5 billion crypto in the matter of just a few weeks, right? Not even, sometimes in a few days, as we've seen with in the previous cycle. But again, I think Link is good here, right? I've taken a bit of partial share in Link over the last few weeks, not only to cover some expenses for the company, for Digifox, but also outside of that as well. Just taking some profits as it's really gone up to these higher levels, because again, I like to usually sell once we've had these kind of exponential run-ups, or at least start taking partial shares. And I start to look for other plays out there that offer opportunities as well in the market, right? Especially those that have the factor of market to scale, meaning that they're much smaller, usually smaller mid-cap plays. So one of those has been RLC. Now, RLC, again, has been picking up steam here over the last few weeks. I'm generally expecting this to go towards this range over over having basically a 15-week cycle. We're taking a look at the weekly chart here. And again, taking off the log chart so we can just kind of see it more clearly here. Actually, no, sorry, we do want to have it on the logarithmic chart. My apologies. You can see here the line of resistance that we broke through. And now we're continuing to climb up here. I think we're about halfway through this cycle. It's going to be somewhere around a little bit above a 300% return here from the lows down there. So again, it's been paying off nicely. Again, I think the broader Oracle market is something that I'm getting excited about, because again, having that ability to connect to the outside world is going to be very important for decentralized applications. And speaking towards decentralized finance and trying to remove as much trust as possible, right? RLC is one of the interesting plays for me. I think they've been around in the space for quite some time. You can obviously see their token's been deployed since back here, since early January, as they got listed on Binance, but they actually have been around since I think the later part of 2017, similar to ChainLink. They've been around for a while. But there's also plays like Band Protocol. Band is another DeFi Oracle play that, again, is focusing on building more of a decentralized solution. There's also Teller as well. There's all types of different Oracle solutions that are coming on the market that I think are very interesting to watch. On a TA perspective, this looks really interesting to me right now. We've had a couple of weeks of pullback. We're well away from the previous highs here back in mid-May. And for this is the kind of trade setup I like to see, these kind of pullbacks. They get a nice breakout here. I want to see volume follow through. But of course, we're early in the week here. But nonetheless, this is just another example of a play you can look at. And I'm thinking if you guys would like me to, I keep up with these different Oracle protocols from time to time. If you guys would like me to do kind of like an overview of the Oracle space, as I've done in the past with previous kind of categories of the cryptocurrency industry, with protocols for enterprise applications, I've also done it for peer-to-peer digital currencies, for privacy coins. If you guys want me to do that, I'm happy to do it. Again, I just have to spend some time to actually kind of do some due diligence, do a little bit of additional research, and kind of put it all together. But I'd be happy to do that for you guys. But anyways, Oracle's very, very sweet spot in the middle between obviously two of our key focuses, enterprise blockchain and decentralized finance. Again, I know a lot of it is rampant speculation, guys. A lot of these projects are very early on. It's very true. And if you can't accept that to a degree, it's going to be very difficult to kind of trade and invest in these things, right? Again, been in the crypto space for quite some time, really got engaged back in late 2016, early 2017. You guys can check my videos. I've seen this, right? Many of you have been here in that journey with us for a very long period of time. I get messages from people who have still been watching since 2017, and that's always very heartwarming for me. But anyways, speaking about rampant speculation, don't think that it's just common in crypto, or more specifically in Dogecoin. It's also in traditional markets as well. So one thing that I want to talk a little bit about is a big misconception that people have when taking a look at traditional markets, and usually taking a look at the term volatility. Many people might know about the VIX, which is an index to measure the spread in price over a given period of time on options in regards to the S&P 500. So to put it simple, right? If there's more fluctuations in price and uncertainty, the VIX is going to spike, right? So usually it tends to be that when markets decline, right, and have major sell-offs, we tend to get spikes in the VIX, right? It's usually that when markets pull back, volatility increases, but that's not always the case. In fact, many cases, volatility can remain high, if not increase, in upward markets. This is something that a lot of people don't know about, and it happened back during the dot-com bubble when there was rampant speculation. There was a lot of major stocks that would do major multiples within a week, or maybe a couple weeks. They would double their valuation, triple their valuation, and then they'd have crazy sell-offs, right? So this increased volatility and uncertainty within the options market is reflecting right now, even in the crazy upward market we're living in right now. And again, this speaks to the kind of retail wave that we're going through right now, where there's a peak amount of retail traders, fundamentals. I mean, if they weren't already tossed out of the window, they have been completely stomped out. No one cares about them anymore. And this paragraph right here, there's a Bloomberg article here. And if you guys ever want to read articles from like Bloomberg or a few other sites that have the paywalls, you can always go to outline.com and just put in the article link. And in many cases, it'll work. Some websites are blocked, but Bloomberg works pretty good. And this is a paragraph here that I really like here that just summarizes the current situation we're in. Systematic traders who make a living by wagering on price gyrations ahead are in the bend. On the other hand, a flat but elevated VIX futures curve is flashing risks on the pandemic-driven economic trajectory. The November election and liquidity threats. On the other hand, S&P 500 bulls tanked on policy stimulus see good reason to defy caution in the VIX landscape. So this again speaks to the current environment very well, and a very well and eloquent paragraph here as to why the VIX is where it is right now. Right now, you have kind of two different situations. You've got the very overwhelmingly positive narrative of central banks just constantly printing money. Now, I think we all agree it's not really a good thing for the everyday person, right? We've constantly spoken out against that, and that's why we're big fans of crypto. But as investors, you have to position yourself. You have to figure out the current macro environment. And if central banks are guaranteeing that they're going to be a buyer and they're going to be printing excessive credit and they're going to make credit extremely cheap, you can't bet against that, right? You can't, like, it's not smart to just simply go out and try to short the S&P 500 or buy puts in this case just to bet against it, unless you're hedging in that case, unless you're getting a small position to cover your other long positions, right? So again, not saying you need to go long on stocks, right? Because there is the other narrative here. We have a very turbulent election coming up that many people really haven't been talking about, or really haven't, we have really no concise answer on who's going to be our president in the next coming months in the United States. It's a very odd environment. You've got COVID. You've got so many different things that are starting to play a very interesting role in shaking things up. And how the world responds in these very turbulent times are going to mean and determine the fate of where we go in regards to markets. So this is why, again, just to clarify more visually what we mean by an elevated VIX. So then I'm going to go ahead and turn off our drawings here, turn off the SMS indicator. And we can see here that this is the VIX. So if we take a look back at March and February, we can see here as we went into a world of, the craze of the virus and stuff, and everyone started to panic and the economy started to shut down, the VIX spikes up as stocks enter into sell-off territory. But we're getting one of those interesting scenarios similar to what we saw back during the dot-com bubble. I'll go ahead and drag it back here. You can see the VIX here going up in a period of time. Oh, sorry, no, I need to scroll back a little bit further. Sorry, over here. The VIX in the 1990s and continuing to remain relatively high and elevated during a time of rampant speculation. Right? So again, the VIX can remain quite high as we are entering in these periods of time. And we can see now that it looks like the VIX is starting to build a higher base comparative to what was previously resistance. So it's now turning resistance into support. So again, this likely means that we're going to see increased price fluctuations. This is going to become the norm, similar to how we had some major price moves in crypto markets back in March. We had one of the worst sell-off days for Ethereum and the second worst sell-off day for Bitcoin. Another thing as well to keep in mind is in regards to global markets right now is watching the response and what's going to be happening in the macro environment outside of the United States. We have to watch what's going on in a wide variety of stock markets. So again, not only watching it for other opportunities, but just seeing as well, what's going on that could cause a domino effect for Western markets. So there's no safe market to be in right now, right? It really depends about having a diverse range of exposure, having different assets that cover for one another. That should be your priority right now. Because if we take a look at the broader equity markets, the picture is very clear. We have, for example, Tesla. And I'm a big fan of Tesla as a company. I'm interested in a lot of other electric vehicle companies. I think this trend is just it's already kind of set in stone for the next 20, 30 years. So it's kind of a long-term game. But at the same time, right now we're witnessing the Tesla pre-market is up another 4.3% after already climbing up 37% in the last few days, starting here back on July 1st. We've been continuing to climb up here over the last few days of trading, And now Tesla is worth more than any major automotive company in the world. Toyota, being one of the largest automotive companies in the world, produces, I think it was about like 30, it was an alert I got from Robinhood, and I don't really do too much trading on Robinhood or care much about the reporting, but they did come up with an interesting statistic where I think they looked at their financials, and Toyota makes like 33 cars for every one car Tesla makes, and Tesla's worth more. And of course, Tesla hasn't even recorded an annual profit, right? Now, I love the company in a lot of ways, but again, this speaks to the kind of environment we're living in. There is no fundamentals, right? It's all about the vision. It's all about, I think someone put on Twitter, investing in Tesla is not, I think they said it was a mindset, just to put it metaphorically, right? It's all a game. It's all a game right now. Equity markets are just pure speculation. Apple right now, this is a perfect example, right? We'll take a look at Apple and Amazon. Apple back here in March came down back to its $1 trillion market cap valuation. And ever since then, since back in March, over the last few months, right? Really just the last, not even 4 months, last 3 months, right? In less than 3 months, it has come up to a valuation of $1,620 billion. And it looks like it's very much on its way towards getting to $2 trillion by the fall, if not sooner. Let me ask you all something real quick. From this point here back in March, or even back here in January of 2020, or back here maybe towards September when we were back at $1 trillion market cap, even as far back as 2018, is there anything fundamental that makes Apple worth a $2 trillion market cap versus a $1 trillion market cap? There's nothing. There's nothing. They haven't lined up any major new products. I know they've been exploring, augmented reality and a few other things, kind of the typical like side innovation that Apple's doing, but there's been nothing big. The Apple Car, we haven't heard anything about it. There was some rumor about a new wave of like Apple glasses that were going to be maybe a competitor to Google Glass. Nope, hasn't really come out. Right? No confirmations. So what is this proving? Well, it's proving that excessive stock buybacks, which Apple has engaged in over the last few years, excessive central bank monetary policy has built an environment where there is no such thing as fundamentals anymore, right? And as companies start to return towards a more cash positive scenario and earnings start to rebound as things start to reopen a bit, this is just going to keep going. When the Fed starts to taper off, corporations will start to step in with stock buybacks and dividends. And it'll be a constant game where you don't want to bet against this. But I will say, and much like Amazon here, which is in a similar scenario, came back down below its $1 trillion valuation, came right back up, and now it looks like it's well on its way towards $2 trillion in valuation. And the same likely goes for a lot of other companies, for example, like Microsoft, right? This is all happening right now. Microsoft is in the exact same scenario after a pretty stark correction. It's back on track to possibly reach $2 trillion. So with all this being said, right, is there going to be a trade at the end of this, to bet against this, to trade the sell-off? Absolutely. But what do we want to wait for before we start to take those kind of trades? We want to wait for the initial pullback, right? Initial week or two of sell-off, a rebound upwards, and a lower high. That's the only way I would buy a put, the only way I would actually take a short position on the FANG stocks. I'm going to wait patiently for that. Right? We do not want to try to bet against a vertical market, a market that's just constantly rising higher. But again, one thing that I've been positioning myself in is Tilray. This has been one of the cannabis plays that I've been holding at the moment. It's been one that we've had on the newsletter for some time. And I not only made a previous successful trade in it, but I've been holding my position. And it's roughly around where I got an entry into my position for Tilray. So again, we got this rebound here. Didn't hit my stop losses or anything that I had down here. So again, if we take a look at it, roughly speaking, it's still setting higher significant lows from the two previous ones. And again, if you want to consider these down here as well, still higher lows. So I want to start seeing higher highs, and I think that this broader sector is going to start picking up. But watch the ETFs here, see what happens, see if we can hold this line of support, or maybe it doesn't even revisit it at all and just keeps climbing. I think, again, in a time of rampant speculation, what you're going to see, and one of the biggest things I can recommend people to watch outside of the VIX, is taking a look at the small caps versus the large caps, okay? So you could do, for example, just to kind of visualize this, you could take a look at the things like the Russell 2000, which show that obviously, I mean, if you take a look at the NASDAQ, which is breaking to all-time highs, the Russell is still, just turning off our drawings here, still far beyond its relative highs in the past back here in August of 2018, right? The best way to look at this, though, is to take a look at things like the NASDAQ 100 and divide it and make a ratio, as we've talked about, between the actual NASDAQ itself, right? We've started to reach towards exponential levels for these higher valued companies. And it's a matter of whether or not this trend is going to continue now that we're re-entering back into dot-com era territory. Are we going to start to see valuations fluctuate back down into the smaller and mid-cap size companies? Or are we going to break to new all-time highs where we have more excessive conglomerization and large cap plays dominating the market than ever before? This is the really interesting play that all of you should keep your eyes on, in my opinion. I'm not saying you should invest one way or the other, but to watch how the market reacts to this. Anyways, that's it for the video, everyone. I know I've rambled on enough today. If you like this video, please drop a like, consider subscribing if you haven't. And if you like this video and you want to make sure you don't miss another one, please make sure to hit the bell icon. We do videos Monday through Friday for the most part and cover all types of exciting things going on in markets. But that all being realized, hope you all are having a fantastic day wherever you are, and I'll see you all in the next video. Stay tuned.